Join me as I dive into the top financial mistakes that every investor makes and see if I can avoid them all while sharing my own investment journey. When it comes to investing, we've all been there, making mistakes that can cost us big time. But the good news is that we can learn from these errors and improve our investment strategies over time. The question is, what are these common financial mistakes that investors make, and how can we avoid them? Emotional decision-making is one of the most prevalent issues faced by investors. We tend to make impulsive decisions based on our emotions, rather than taking a step back and thinking rationally. Whether it's fear of missing out or anxiety about losing money, our emotions can cloud our judgment and lead to poor investment choices. Another common issue is lack of research. We often dive into an investment without doing our due diligence, without understanding the investment's underlying principles, or without assessing the risks involved. This can lead to investing in something that's not aligned with our financial goals or risk tolerance. Many investors also fall prey to the get-rich-quick mentality. We're often drawn to investments that promise high returns with little effort, but these investments often come with high risks. We need to be realistic about our investment expectations and focus on building long-term wealth rather than trying to make a quick buck. Finally, some investors fail to diversify their portfolios. They put all their eggs in one basket, so to speak, which can lead to significant losses if that investment doesn't perform well. By diversifying our portfolios, we can spread out the risk and increase our chances of achieving our financial goals. Let's take a closer look at some specific financial mistakes that investors make. For example, some investors fail to set clear financial goals or develop a solid investment strategy. Without a clear direction, it's easy to get sidetracked or make impulsive decisions that can harm our investment portfolios. Another mistake investors make is being overly optimistic about their investments. They might overestimate the potential returns or underestimate the risks involved, which can lead to disappointment or even significant losses. It's essential to have a realistic view of our investments and be prepared for any outcome. Some investors also make the mistake of not rebalancing their portfolios regularly. As market conditions change, our portfolios can become misaligned with our investment goals or risk tolerance. Regular rebalancing can help us stay on track and avoid potential losses. Finally, some investors fail to educate themselves about personal finance and investing. They might not understand the fees associated with their investments or the tax implications of their investment choices. By educating ourselves, we can make more informed decisions and avoid costly mistakes. So what's the most crucial insight or lesson that can help investors avoid these common mistakes? In my opinion, it's having a clear investment strategy and sticking to it. When we have a solid plan in place, we're less likely to make impulsive decisions based on emotions or get caught up in the hype of a particular investment. By having a clear investment strategy, we can also avoid overthinking or overanalyzing our investment decisions. We can focus on the big picture and make decisions that align with our financial goals and risk tolerance. Moreover, a clear investment strategy can help us avoid the get-rich-quick mentality and focus on building long-term wealth. By setting realistic expectations and avoiding shortcuts, we can create a sustainable investment approach that works for us in the long run. In essence, having a clear investment strategy is the key to avoiding financial mistakes and achieving our investment goals. By staying focused, disciplined, and informed, we can build a strong foundation for our investments and avoid the common pitfalls that many investors face. In conclusion, being aware of these common financial mistakes is crucial to avoiding them. By recognizing our emotional biases, doing our due diligence, and having a clear investment strategy, we can make more informed decisions and achieve our financial goals. Thanks for watching, and don't forget to share your own experiences with investment mistakes in the comments below. If you want to learn more about investing in personal finance, be sure to check out my other videos on these topics.